Good morning. It's Monday, September 24th. This is George Tkachuk with Know Your Options Inc. reporting you from the CME Group trading floor in Chicago. Typical Monday morning, so we see some profit taking in the equity markets. Markets are slightly down. However, generally speaking, again, the uptrend still continues. Now, taking a step back, we're looking at some of the positives in the market. If you take a look at last week's, the tightness of the trading days we saw over the first 4 days in the week in the NASDAQ and the S&P 500, that's a sign that institutions are accumulating shares. Meaning it's such a tight trading range, any excess supplies is being scooped up by the institutions. So that's a very positive sign. Now Friday, you had a huge volume spike and the markets didn't move anywhere. Initially, one would say like this could be a sign of stalling, and stalling is a form of distribution where institutions are selling into strength, a lot of volume, a lot of churning, the market's not going anywhere. However, since Friday was a quadruple witching options expiration and the S&P rebalancing day, this probably didn't have that much of an impact just yet. That's to be seen. Now, one of the negatives that we did see so far in the market, and this could be a big negative, is the Dow Jones Industrial only slid down 0.1% last week. However, the Dow Jones Industrial Transport Index fell about 5.9% for the week. And that could be a big negative. If we look at the Dow Theory says if the Dow Industrials climb, the Dow Transport should climb with it, especially if they're hitting new highs. The idea being that if companies are doing so well, they're ordering all these raw materials, and of course, these raw materials have to be transported somehow, so again, the transport should be doing well, and they should be reflected in their stock prices. However, transports for pretty much this whole summer rally have been kind of laggards in the market. In fact, some of the hardest hit stocks last week were the rails. So that's the one big negative to just keep in mind. However, let's look at some of the positives. The positives in the market is we still have the same theme: home builders are on fire. And again, last week, housing starts again improved dramatically, as did existing home sales. And again, this is a theme we've seen going on for a while. So if you're in these stocks, they're a little bit extended now, so don't be chasing them. Look for consolidations, and we'll see if these will continue. Another very strong sector that's been going on basically for 9 months this year is the biotech sector. Again, a lot of these stocks are extended, but we do see a few still setting up nearing buy points. You have some names like Biogen, IDEC, Amgen. A lot of these stocks are still acting very strong, and of course a lot of their smaller ones like Pharmacyclics, Aria Pharmaceutics, Jazz Pharmaceutics. So we see a lot of strength in the medical and residential building sector. So with that, let price and volume be your guide. We'll see how today ends up, if the volume picks up or if it stays muted, if we continue this morning sell-off or if it firms up throughout the week. Don't be too quick to judge. Don't worry too much about all the news coming out of Europe. Just watch the price and volume action in the equities, and that'll be your guide. Thanks. Have a good trading day. This is George Tkachuk, Know Your Options Inc., reporting you from the CME Group trading floor in Chicago.